I think this is going to turn out to be one of the longer bear cycles that we've experienced in a long, long time.
On what is a security and what is not a security.
We are entering into a major recession into Europe. It's going to impact the US economy as well.
Garrett Soloway believes this could be one of the longest bear markets. Cardano's founder, Charles Hoskinson, thinks XRP is not a security. And Ben Emons of Medley Global Advisors thinks a European recession would not be good for the US markets. This is the State of Crypto. Subscribe and hit the like button.
What are your thoughts about another rally in this bear cycle?
Yeah, so I do think there will be more rallies in this bear cycle. I think this is going to turn out to be one of the longer bear cycles that we've experienced in a long, long time, mainly because if you look at the past bear markets, they've been shortened because of the Federal Reserve printing money, right, and stimulating, and the government stimulating. So I think that without that, it puts us in a kind of a serious situation that this could be an extended bear market. Now, a bear market is never fun, but it does offer opportunities. And I do think you will get multiple big rallies, 5, 10, even 15% rallies from low pivots. But again, it's going to be a stock picker's market, and you got to be nimble.
I don't believe that XRP is a security under those standards and statements. And it'd be quite problematic for the SEC to capture this under their definition, because it would inadvertently capture most of the cryptocurrency space if desired. There's really no way to satisfy it. And it's not clear how would you even operate a system. For example, if somebody was responsible for reporting, if the reporting entity goes out of business, the protocol and currency are still there. So then who reports for it? If Ripple was to be a security, then every US holder of XRP would be holding securities and actually in violation of securities laws themselves. And they would lose all liquidity in the United States, but then enjoy, because they've already been approved as a currency or another instrument abroad, different forms of liquidity abroad. So it's an incredibly puzzling case. It's quite bizarre. And just unbelievable to me.
It's Julie here. It's good to see you. Let's connect the dots here, shall we? Because we were talking at the top of the show about the European energy crisis and how acute it could be, even with this aid now that the UK and other governments are talking about. Talk to us about the ripple effect potentially for here in the US and for perhaps US companies that have exposure in Europe.
Yeah, for sure, Julie, and good to see you again, too. Yes, one, you can see it actually in natural gas prices. Right, they have been rising pretty fast here, and that is input to companies for any type of production. And secondly, it's also about expectations. If we are entering into a major recession into Europe, it's going to impact the US economy as well. It's just not going to be insulated. Lastly, it's about the measures taken. So, the Bank of England and the ECB have to catch up to the Federal Reserve, and as they push up rates faster, it pushes up their local bond yields, and that's reflected today into treasury yields, for example. On top of it, that you had a stronger than expected ISM services. So I connect all these dots. Yeah, we're looking at an environment of rising yields and then falling stock prices on a really mixed or negative economic picture.
Ben, do you think what's happening in the Eurozone right now blows back onto the U.S. to such an extent that it puts us in a recession?
That's maybe a bit difficult to determine at this moment. And the real reason is that the U.S. consumer obviously has been quite resilient, as everyone has concluded, and may not be so directly affected by Europe exactly that way. But on the other hand, companies and export and trade will be, and ultimately that's what could bear fruit, be negative on employment here. So I think that's probably the real connection. As Europe gets into a recession, we do get changes in employment picture here. And that would lead then to confidence issues and spending curtailing. So, yes, there is a risk here. I don't think that the U.S. economy right now is in a recession, but it could be on the heels of as Europe enters a recession. So clearly a link there.